Good morning, all. CamelbackTrading.org coming to you this Friday morning, December 16th. We are looking at Window Traders Market Profile of ES and SPY. Well, I said I'm going to decide probably today what the weekly is going to be. Well, the weekly is going to be firmly down. So things have changed here. You know, we mentioned, I'll show you on the chart on the weekly, once we took out a weekly low when I said I thought the rally, Santa Claus rally would be capped at September's high. And boy, oh boy, has it been capped, as we didn't even get to it. We missed it, and now we've rolled over tremendously. Yesterday, we pretty much stretched the balance low. Now we're right now going through the phase of going through a balance and not looking back. Remember, SPY was ex-dividend today, so the gap is going to be whatever the dividend was, $1.50, $1.70, I'm not sure, but the gap in SPY will be that much larger than ES. Okay, just please keep that in mind. Qs right now traded a lot lower, but they're not far off yesterday's low. So we'll see how they act come 9:30 with 75 minutes to go. Russell looking to gap lower, and obviously ES and SPY. Now, we're going to be heading into some very, very visual areas here on this downside move. First will be the 50-day moving average, and then second will be where that gap, right? SPY's gap starts at 385.63. So as you can see where we're trading right now at 384.83, we're basically at the 50 and right inside the gap. However, ES, right, because there's no dividend, and I'm also using December's contract reference points, their gap doesn't start to 38.70.75. Now, pre-market, they got down to around 71.50. So right now, they're not into that large gap from November 10th, but they do have a gap today. So a lot of different moving parts here for both of these indices, or ETF and indice. Game plan, though, is going to remain the same. If the gap is $1.50, I will be looking for shorts against yesterday's low. If the gap fills, I get out and reassess. And the main reason I'll get out and reassess is there's nothing inside yesterday's range. Remember, we said we had a large range yesterday, but all we had is the day's high and the day's low. Okay, the POC is only 7 wide. There's no afternoon rally high. We do have a large sell tail, but there's really nothing inside of it that would prevent it, if we get back inside yesterday's range, from at least testing maybe values high. Things to keep in mind, okay, as the day evolves. Okay, right now, dividend buyers are getting crushed in SPY. People who bought it for the dividend yesterday are not only losing the dividend, they're losing principal. They're losing principal and they're losing the dividend right now. We'll see how that plays out, if they hold on to it or not. So again, a short against today's gap, depending on how large the gap is. Now, things get trickier on the downside the more we go down, because that gap below us is very large. Unless we're going to get some really, really good momentum and tempo and volume, that gap won't be easy to fill the first time. So how will it get filled? Well, first and foremost is if we get acceptance below the 50-day moving average. How do we get acceptance? Well, first and foremost, we start one-time framing down. So at least you have that to lean on. Second, which would be more powerful, would be to have a trend day down into that gap. You start getting things of that nature, that gap will fill. If you don't get things of that nature, that gap's probably going to hold for today, or at least until later today. Again, a fluent situation that we are given play-by-play live webinar trading in this trading room. And then just quickly on the chart, because we'll recap all three of these indices charts tonight, as things have changed big time. So here's the weekly, okay? I'm sorry, here's the monthly. I apologize. We barely took out, well, not barely. We took out last month's high by $3. But it is a monthly chart, and so far failed. So we're still firmly in a 4-month balance, okay, on the monthly. Weekly, last week when we took out the weekly low, I said I think that's going to cap our December rally at best, probably September's high. Well, that's exactly where we attempted to get to and rolled over. This is one ugly weekly chart. The weekly will be firmly down, and if we don't close inside of 391.64, which right now is $7 below, we'll have an outside week down. Okay? And then on the daily, obviously, after getting above the 200-day moving average 5 days or 6 days we attempted over these past 2 weeks. We failed the 200, we failed the 20, and now we're about to test the 50-day moving average. 2 gaps in a row, it looks like. So remember, we talked about if this was short covering, the majority of it, there's no bid underneath. Do not expect anybody to make a market on the way down. That's not the purpose of algorithms or high-frequency traders or anything of that nature. There are no such things as market makers anymore. They'll just step away and let the market reach its own equilibrium. Good luck trading. Thanks for the likes and subscribing to this channel. And we'll recap the day and the week at 4 p.m.